Hi, everyone. Hope everyone had a great weekend. It's the end of Sunday right now. Hope you guys enjoyed it. I ate too much today, watched too much football. Now it's time to get back to work. So we're going to look at Bitcoin, Ethereum, see what's going on there for today. It wasn't a good day for them, but we'll take a look at it. And then we'll also take a look at what's going on this week. So we have Hut 8 reporting on Thursday. We got Marathon reporting on Tuesday, their earnings. We got Riot on Wednesday. And then we got CPI data also coming on Thursday. Plus, we also have the midterm elections happening Tuesday. So I'm not going to get into the politics of it all or any of that. I'm just going to cover what's going on with the miners and the CPI data a little bit, and we'll call it a day. All right, so as always, this is not financial advice for entertainment only. Do your own research, and I'm invested in following coins and companies for full disclosure. And if you guys enjoy this type of content, please hit the like button, subscribe, helps me out. All right, let's take a look at Bitcoin. Bitcoin right now is at 21,056. We were red on the day today. We were down 1.84%. We hit a low of 20,886. We closed at 20,909, so it wasn't too bad. On the RSI, we are still looking good here at 59 right now. Last time we were down here, we were down a little bit, like $300 down from where we are right now, so that's a pretty good sign. Looking at the forward chart, we're seeing the same thing. RSI is at 46 right now. Last time we were right around here, was back here. Price at that point was about $500 lower than where it is now. So that's still a good sign. So it's still looking a little bit bullish. And then if we finally look at the 1 hour chart, RSI has obviously plummeted here in the last couple hours. And we are now down to, I can't even see how low we are. There we go. We are way low. We are at 23. The closest we were here in the recent time frame is right on Wednesday, the November 2nd. It was at 29 at that point, and the price of Bitcoin was at 20,100 roughly. So we're up about $900 or $800 from where we were back then. This obviously leaves us a little bit more room to run up back in price. And hopefully this doesn't continue going down even more. It could trade sideways and go down, but we'll have to wait and see if that happens over tonight and into tomorrow. But we'll get some more definitive answers going forward. Right now it's looking good. Ethereum was at, well, it was down also, but let's go to the daily chart on it. Ethereum, let's see here, it finished out the day. It was down 3.61%. It closed at 1,568. It is up a little bit right now to 1,575, so not too bad. RSI is looking pretty good as well, 59. Last time we were lower in price, right around 1,517, so we're up about $60. Looking at the 1 hour chart, we are way oversold as well here, and last time we were this low was right around here, also on November 2nd. Price at that time was $1,510, so we're up about $60 on price, even though RSI is even lower on it. So it's looking good. Okay, let's take a look at what's going on here with this week. So nice little story here from Yahoo Finance. October CPI may solidify case for terminal rate above 5%. What to know this week, basically. And here's what is the interesting tidbits of it. So Thursday morning we'll bring traders the closely watched consumer price index, CPI for October. Economists surveyed by Bloomberg see headline CPI at an annual 7.9 for the month, so that's going to be better than it was in September. A moderation from September's year-over-year increase of 8.2. It'd be great if it came in even lower at 7.9, but we'll see. Core CPI, which strips out the volatile food and energy components of the measure, is projected to come in at 6.5, a little changed from the 6.6 last month. As we know, energy has had a huge impact on our economy and around the world. Gas prices, natural gas prices have gone up like crazy. Electricity has gone up as well, so that's hurting obviously the miners. We've seen that. We've seen Argo. We've seen it with also possibly with, what's the other one? I'm drawing a blank here. Iris. Iris is also having a hard time generating enough revenue to pay some of their bills. So it's definitely been troublesome in the markets. Going down here, we can see also the U.S. economy added 261,000 jobs in October. Another robust hiring figure seen as a confirmation to policymakers that the labor conditions can weather a further ramp up in the Fed's key interest rates to fight historic inflation. And that's kind of the statements that we heard from Fed Powell on, when was that? Thursday, I think it was. Thursday or Wednesday of last week, when he said they're going to be, going strong with the rate hikes until they see a cooling in the economy. The central bank delivered a fourth consecutive interest rate hike of 75 basis points while hinting at a slower pace of hiking, but a higher final terminal rate. Higher terminal rate, we're going to be going probably to 5.5, somewhere around there once it's all said and done. So here's a quote from Fed Powell, I believe. Restoring price stability will likely require maintaining a restrictive stance of policy for some time, he said in prepared remarks following Wednesday's policy announcement. Recent inflation data have again come in higher than expected, as expected. So until we see that CPI data come down even more, along with possibly payroll, employment figures, we're going to continue raising interest rates basically until they see those come down. So a wave of Wall Street strategists have lifted their expectations for how high the Federal Reserve will raise its key interest rate after Wednesday's slower but higher messaging from Powell. An October CPI this week will affirm the revised forecasts while offering investors clues about the size of December's increase. Goldman Sachs was the first among big banks in the days leading up to the November's FOMC meeting to warn rates may rise as high as 5% by March 2023. TD Securities lifted its terminal rate forecast from a range of 4.75 to 5% to now 5.25 to 5.5% and sees a 50 basis point hike at the next meeting in December 13-14th. BPNP Paribas expects a fifth 75 basis point increase next month and a terminal Fed funds level of 5.25% in the first quarter of next year. So that would not be good. It's going to be bad for the miners, bad for the stock market as well. Investors are looking for a slowdown in the interest rate hikes. If we get 50 basis points in December, that would be great. I think it's going to be a sign that things are starting to cool off in the economy and everything else. But we'll have to wait and see. We still got another month to go before we find out. But the CPI data coming out on Thursday is going to give us maybe a little bit of a hint how they're going to go, whether it's going to be 50 basis points or 75 basis points in December. Okay, now on to the miners themselves. So we got Hut 8 reporting, like I said, on the 10th, which is, I believe, Thursday. And the estimated APS is negative 3 cents per share. Now, Marathon is supposed to report on Tuesday. Their estimated EPS is negative 34.92 cents. And Riot right now is on Wednesday. Their estimated EPS has them at negative 0.0244 cents per share. We'll obviously have to see where they come in. We won't know until the data comes out. So luckily the data is coming out this week and we'll take a look at it and we'll cover it here when it does happen. But here's kind of what I'm looking for in all these three miners when they report. So this is Marathon's numbers from Q2. Some of the things that I'm looking for here is, let me see here. Total current assets. That's fine. I'm sure we're going to see, I want to see obviously cash and cash equivalents. See if that's holding up well. Also, digital currencies, we know that's going to go up. They have a higher huddle right now, so it's around 200 some million. So that's going to be up higher, or it should be higher. And then digital currencies restricted, I think that's going to go up higher because they have almost 3/4 of their BTC as restricted. So that should go up as well. Let me see here. What else we have here? Deposits, loan receivables, prepaid expenses, total current assets, fine. Accounts payable, short-term borrowing, so total current liabilities, we want to see this come down to 90 million from Q2. We want to see it come down. We'll see if it actually does or if it goes up. That's not a good sign. And then total liabilities, we definitely want to see this come down. Total long-term liabilities was at 759 million, almost 760 million in Q2. Definitely want to see this come down, or if this comes up, like I said, that's going to be a good sign, unfortunately. Convertible notes, that may increase. We'll see how that plays out. And what else? The other thing I want to see is, where is it here? Revenue. Revenue should be up from Q2 based on what we have so far for the mining. We'll take a look at it here in a minute. Cost of revenue, we want to see that. I don't know if they can bring that down at all. That would be nice to bring that down. Compensation, general administrative fees, we want to see this come down. It's gone way up here in the Q2 from Q1. Definitely want to see that come down. Impairment of digital currencies, I don't think, we'll see how that one's going to play out. I think Bitcoin's up a little bit from Q2, so we should see a positive number on that one. Change in fair value, gain on sale of equipment. Not sure if we're going to have any sale from that. Operating expenses, let's see what else do we have here. Income deferred, net, basic, and then the other thing I want to see is number of shares outstanding, both basic and diluted. See if that has increased, which I think it has. So they're 109 million. Let's take a look at it here, what we got on top for them, calculated currently. 116 million, so we should see an increase in that. And then right now in Q2, or actually, well, yeah, Q1 is going to be less than 22, so they're going to be down on revenue. I was thinking of Q4, which we're in right now, which I knew was going to be up because they installed a lot of miners. But Q3 is going to be down again from Q2. So based on this, I'm thinking everything's going to go up as far as liabilities, things like that. I just don't know if they were able to pay off anything, especially since they're hodling. But we'll see all the numbers when they come out. But that's kind of what I'm looking for in Marathon. Next one we'll take a look at is Hut 8 really quick as well. Hut 8 I currently have at 182 million shares outstanding. We'll see where they come in at. And we have them at about 20 million, which is going to be less than Q2 numbers for them. Let's take a look at their numbers here. Some of the things that we want to look at. Current liabilities, they don't have a lot of debt, which is good. Total liabilities is 63 million. So that was a decrease from Q1. We want to see that to go down. Total current liabilities isn't too bad. What else do we have here? Warrants, share capital, 714 million in that. Revenues will be down. We know that. High performance computing, we want to see an increase in that. Since they don't have any GPU mining anymore for Ethereum, want to see updates if they're actually mining other coins and if those coins are profitable for them, along with high performance computing, how well that side of the business is doing for them also. They don't have any hosting that I'm aware of right now. They didn't report it on Q2, so self-mining is going to be down on it. So I'm hoping that high performance computing is up than what it was at 4.7 million in Q2. Expenses, depreciation, cost of revenue, site operations wasn't too bad. Selling and general administrative, it wasn't too big of an increase from Q1, so not too bad there. Let's see, like to see it to come down, but we'll see if it comes down actually. Net income before, let's see, your finances, again, revaluation, don't care about that. And then we'll see shares here. How many shares we got right now? Yeah, so that's kind of why I look at the same thing in Hut 8. And finally, Riot. Riot is the other one. Riot has 167 million shares outstanding. They are going to be definitely down for September. But the interesting part with them is their curtailments on electricity. They're getting credits for it. So I want to see the cost to mine BTC, basically Bitcoin for them. If they're getting credits on the electricity that they're not using during that time, are they offsetting most of their electrical usage? It's almost like coming in at 100% profit for them. If it's close to 100%, that's going to be 100%. But if even it's 90% profit on the Bitcoin that they do mine, that's huge. So I want to see that. Let's see here. What do we got for Riot? Assets are fine. Total current assets. Liabilities is one that we're interested in. Liabilities. Here we go. Total current liabilities was 100 million in Q2. Like to see that come down. Contingent consideration liability, future power credits, current portion. So power credits there, deferred revenue, current accrued expenses. I mean, it isn't too bad. The balance sheet isn't too bad. Deferred revenue less current portions. Let's see. What else do we have here? I'm trying to find revenue. Revenue should be fine. Oh, the other thing is hosting. I want to find out what their margins are on hosting. Mining is going to be down for sure. Engineering, that'll be interesting to find out what that is like this time around. It was nicely up from Q1 to into Q2. Selling and general administrative actually went down in Q2, so that's fine. Depreciation went up. Let's see here. Power curtailment credits. They got 5 million in credits for that. Realized gain sale. Don't have anything here. Unrealized. Where is their selling? Yeah, I mean, selling in general administrative isn't bad. It actually went down, like I said. So we're just looking for minor improvements here from them. And the things that I really want to know is on their self-mining, were they able to use the credits to offset the electricity, and what's their margin on mining, basically, for that. And then we'll see how many shares they actually have outstanding. Q2 was reported 130 million. I have them at 167 million, so we've had a pretty sizable increase here. Debt. I'm trying to think if they had any debt here. I think they were in pretty good shape as far as debt is concerned. That's minus weekly. Where am I looking at here? Minor comparison. Riot. Yeah, I mean, they were pretty good in debt at the end of Q2. Total liabilities was 100 million. Total assets was almost 500 million. Total liabilities was 147 million. So they were in good shape. We obviously want to see some improvements. Also, what I would like to find out is on their immersion cooling, how well that's working out. What have they seen as far as gains in hash rate? And if basically increases in efficiencies on those miners. And the other thing is how profitable is the hosting for them. That's the other big one that we want to look into. Does it even make sense for them to do hosting? I don't know. But that is it. I hope you guys enjoyed it. We'll see how this week plays out. We are still missing a couple miners for their October numbers. And if we look down here, we can see we're still missing Argo, Core. Surprisingly, we're still missing Greenidge, Hive, Iris. While Exfolio, we know we're not going to get more than likely. Mawson, Soluna, and Sphere, and Stronghold, we're not going to get for sure. So we're still missing quite a few of those. Hopefully they'll come in this week, and we'll talk about them then. But that's it. Hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. Hope you guys have a wonderful week. It'll be interesting once we get the numbers from all these miners, and we'll get them updated here. We'll talk about it. So I hope to see you then. Until then, have a great one. Bye.